Good morning, everybody, and welcome to the Morning Volatility Report. This is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to Monday morning, this first Monday of November. If you live in Maine, the sun is shining, and it is quite lovely. If you don't, I don't know what your weather's like. Anyway, trade idea of the week, Friday afternoons, try to catch Mark, usually between 2 and 3. On what might be going on. Next thing is pro trading course for everybody this Saturday. All I can say is take the course. You're going to learn something about trading volatility. If you don't think you learn anything, we'll refund your money. You can't get a better deal than that. You can tell Mark that I said so. We usually get pretty high satisfaction out of all those classes. If you're a gold level member or even an Option Pit Live member or higher, I believe you get all these for free. Right, so that's basically a $125 class per month for free with the price of a gold subscription, which is actually less than that. So you get much more than you pay for here at Option Pit. I'll tell you what is not. We might be talking about volatility, and we'll be talking about low vol environment in the vol class because that seems to be what we have. But for right now, all I can say is, I have no clue. The only thing that seems to be moving is recovering a little bit is some of the biotechs showing some movement, but we have the SPX all of a sudden just moved 50 basis points. You got a little bit of a move there. Let's see how the Russell's doing this morning. It's making a little bit of move. So we got something happening. The weekend for VIX, I think we opened like 15.5, and we're rapidly dropping. I think there's going to be a lot of eyes on the payroll report this week. I don't see what the great news is that's making us rally, but as far as we go now, since we're back into the expecting QE era, we should start. That's usually the wind usually has been at the market's back. Stuff that we will also be looking at a bunch of stuff in the chat today around banks and some of the names that have been moving out a little bit recently. As far as volatility goes, I expect it to stay kind of where it is. We shouldn't see too big of a move until Friday. Again, all this end of the year speculation on what they're going to do with rates, even though most people think they're not going to do anything until 2016. It still has implications for volatility in VIX. Right now, overall, what you will notice, though, is just take a look here. Okay? The 60-day volatility is 22%. All right, so over the last 60 days, that's been the average volatility. Obviously, we've had some huge moves there. The 10-day volatility is now 12.5, a little under 12.5. So I still think if all of this maintains, the vol gravity is still kind of pulling down. It feels like the natural way is down, at least for right now. Whatever caused the panic in August, I guess China falling apart, all those issues seems to have gone away. And again, if you want to look at products that are sort of long-term volatility, right? You have a product like ZIV. It's not back to its highs, but it's recovered a bunch. Now it's going to notice how long it takes to kind of take that slow march of contango up. Again, ZIV an inverse volatility product, but to get from here to these kind of what we'll just say the contract highs for ZIV, you need kind of the sustained low vol here, which is what we had at the beginning of the year. We kind of were grinding up to those all-time highs in the SPX. Obviously, we had the huge volatility, and now the grind is coming back. So to see those kind of highs again, we need to have sort of that sustained contango, sustained future decay that we've been having. But What you're not really seeing is a whole lot of, I'm going to just sell the VIX down to 12 tomorrow. Okay, probably not going to happen. So just expect a slower grind for volatility, really in either direction unless we have some sort of surprise. But as of right now, just seeing the universe as it rolls along. Oil stabilizing. We got a bunch of oil earnings coming out this week, a bunch of commodity earnings. That might move things a little bit. All right. So that I don't expect a lot of action, and we're going to have to really hunt around for something to do. There was some really interesting stuff on Friday. Toward the end of the day, we had a little movement, but as of today, I think we're going to play the wait and see game here a little bit. All right, but we are just a hair away from all-time highs, literally. What are we? 1% move, 1.5% move, and we're back again. So the QE juggernaut is still moving along. Don't forget, there could be that surprise by Draghi in December. So December positions or positions that are looking at December could get a lot more interesting all of a sudden. Right? Because one thing you're going to notice is, as we just peel off for the day, let's just get to a little bit of December term structure. You note that there's almost always a little bit of contango, but the D's is still kind of bid here. All of our shorter term stuff, besides this NOV here, which will start to fade probably today if we continue our rally, all this forward volatility now is getting kind of, here's the holiday, so they took the holiday out of Thanksgiving week already. But, besides the non-farm payroll number, which is holding these two numbers up, note that all this stuff is softer. Okay? So what will happen is we'll probably pick up a bid here past the Fed December number as all the forward numbers after this week start to fall away. So really this week feels like it'll be your last real chance to sell short-term volatility before it all sort of goes away. And with that, again, the most I see is really decay from volatility products. I don't see a whole lot of movement in the cash. And with that, we will move on to our chat room in a few minutes. Have a good day.